Hello everyone. Welcome back to Stock Market Meridian. Today's date is June 22nd, 2026 and you're watching today's post-market report. Today we have some major global political, economic and stock specific updates. So let's begin the video. First, let's start with a major breaking news from global politics. Big political shock from UK today. UK Prime Minister Keir Starmer has announced his resignation, making a dramatic end to his tenure leading the government. He has also asked for a timetable for his departure and will remain in power as a caretaker until a new leader is officially chosen. Now, the big question is what led to this sudden resignation? There are three major reasons behind this. First is electoral setback. Pressure increases significantly after the Labour Party suffered major losses in local election. At the same time, rival parties like Reform UK and the Greens started gaining strong momentum and eating into Labour's voter base. The second major reason is internal rebellions. Starmer faced serious divisions inside his own party, especially regarding welfare reforms and changes to disability benefits. And third major reason is policy flashpoints. The government received heavy criticism from both voters and opposition parties over sensitive issues like immigration control and clean energy transmission policies. Now, the main concern is who will replace him. Senior leaders like Andy Burnham, Wes Streeting, and Juveti Cooper are currently being discussed as strong contenders for this position. This is a major political shift for the UK, especially less than 2 years after a landslide election victory. What do you think about Keir Starmer's resignation? Let me know your thoughts in the comment section. Before getting to further video, remember that I upload pre-market video every single morning before market opens and post-market video right after the close in the evening. Please watch the full video, and if you think these videos are informative for you, then please subscribe the channel and hit the bell icon. Next, we have a very important economic update for Indian markets, technology and infrastructure related. Rating agency Moody's has issued a major warning regarding India's worsening water crisis. According to Moody's, India's water stress could become significantly worse in coming years, and new technology, especially AI, is becoming a major driver. Let's understand the key reasons. First is the AI demand shock. The rapid boom in artificial intelligence is pushing tech companies to build massive AI data centers. These centers require huge volumes of water, millions of liters to cool their servers, putting heavy pressure on local water supplies. Even in other countries like US, several regions already faced major water stress because of these data centers. In some locations, public protests forced companies to withdraw projects. Now, many major tech companies are expanding aggressively into India. Second reason is poor governance. Moody's highlighted that India's water management system is highly fragmented across different authorities, making nationwide crisis management extremely difficult. And the third reason is cheap pricing risk. Since water pricing remains heavily subsidized, industries have very little financial motivation to recycle or conserve water. And finally, the biggest concern is economic threat. If water scarcity worsens, it won't only impact agriculture. It could disrupt operations of tech companies, power plants, and industrial factories, and this directly threatening India's long-term economic growth. This is also one of the major reasons why experts are expecting strong pressure for this year's El Nino effect. So next, let's move to the defense sector. Major updates are coming regarding global demand for India's BrahMos supersonic cruise missile. According to latest reports, India is now actively in talks with UAE to sell the BrahMos missile system. And it's not just the Middle East. Reports also suggest that Thailand and Chile have officially shown strong interest in acquiring BrahMos missile system. This creates a massive export opportunity for Indian defense manufacturers, especially companies like Bharat Dynamic Limited. If India successfully secures export deals with UAE, Thailand, and Chile, it could take India's defense export revenue to a completely new level. This is currently based on reports, not official confirmation. Next, move to stock specific updates. Cochin Shipyard has officially responded to rumors regarding a potential government stake sale. The speculations about government disinvestment has now been completely dismissed. Finance Ministry official has denied reports claiming the government is planning an OFS in Cochin Shipyard. Cochin Shipyard itself has also clarified denying any plans for stake sale or OFS. Because of this speculation, the stock initially fell more than 3%. But after the official confirmation from authorities and the company, the stock recovered sharply. Next update from real estate sector. Prestige Estates project is planning a major expansion in northern India. Prestige Group is set to launch two new housing projects in Delhi NCR market during this financial year. This expansion carries a massive revenue potential of nearly 7,000 crores. Entering the high demand Delhi NCR market with such a large project pipeline could become a strong growth driver for Prestige Estates. Next important update is Asian Energy Services has secured a major EPC contract worth 187 crores. The contract has been awarded by Gujarat State Electricity Corporation Limited. Under this project, the company will handle engineering, procurement, construction, and commissioning for upgrading the coal handling plant at Utke Thermal Power Station in Gujarat. This is a very important milestone for Asian Energy because this is their first major order outside Coal India and its subsidiaries. This clearly shows the company is successfully diversifying its customer base. The project is expected to complete over the next 2 to 3 years, giving strong revenue visibility. Next update from infrastructure sector. PNC Infratech has incorporated a new wholly owned subsidiary for executing an NHAI highway project. The subsidiary is named Barabanki Mustafabad Highway Private Limited. This company will function as a special purpose vehicle or SPV for this project, and the project involves construction of four-lane highway spanning over 43 kilometers on NH 927 in Uttar Pradesh. This road project will be executed under hybrid annuity mode HAM. PNC Infratech and its holding arm currently control 100% of this entity with an initial cash subsidiary of 10 crores. Now the final and the very important update is Bajaj Auto has officially approved a massive share buyback. Both the board of directors and shareholders have approved the final terms. Bajaj Auto will buy back shares at 12,000 rupees per share. Current market price is at around 10,214 rupees, which means nearly 17% premium over current market levels. The company plans to buy back up to 46 lakhs 94,000 shares. This takes the total buyback size to approximately 5,632 crores, and the proposed buyback represent around 1.68% of total paid up equity share capital. The buyback will happen through the tender offer route. As per SEBI regulations, a minimum of 15% of the buyback will be reserved for small retail shareholders. Another important point is company promoters and promoters group have clearly stated they will not participate in this buyback. This means public shareholders will get a larger opportunity in the buyback process. This update came after the market closing. That's all for today's major updates. If you found this video useful, make sure to like the video, share it, and subscribe to Stock Market Meridian. Thanks for watching. Signing off. Bye bye. Jai Hind.